Welcome to this special edition of All About Bitcoin in the home of a prolific hodler, Bitcoin bull. I'm talking about Michael Saylor. He doesn't need any introduction, but he's the CEO of MicroStrategy. Hello there, Michael. Thank you for joining us.
Thanks for coming to visit me, Christine.
Yeah.
Welcome to my home.
Welcome to Michael Saylor's home in the den of the Bitcoin bull. All right, so we're here down in Miami for NFT Art Miami Week, but we happen to be stopping by Michael's house. I'm your host, Christine Lee, anchor at CoinDesk. Let's check in quickly on Bitcoin right now. The CoinDesk Bitcoin price XBX index currently trading at 57,300 and well, it was $55. Bitcoin is slightly down just over 1% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So this is a very exciting episode that we're covering as part of our coverage for the Future of Money Week. MicroStrategy, Michael's firm, has just recently bought 7,000, or for the fiscal fourth quarter, has bought 7,000 Bitcoins, which are worth, which now your firm holds over 121,000 BTC valued at about $7 billion. You're also one of CoinDesk's most influential alumna since 2020. So, Michael, we're seeing Bitcoin dip slightly on news that the Federal Reserve Fed Chair Jerome Powell is saying that inflation may not be as transitory as previously believed, may not be so short term. Does this come as any surprise to you?
I think everybody in the crypto community has been focused on inflation for the past year and a half. I got into Bitcoin because I thought that inflation was going to be a problem starting in March, and that's why we got into the business. I saw the congressional testimony today, and my takeaway was there's acknowledgement by the administration that there is an inflation challenge that needs to be addressed, and there's political consensus on both sides of the aisle that the Fed should do something about it. I think that was the news in the market.
Mm-hmm. So there is thought that there will be some tapering in January, and it'll be more hawkish in terms of what the Fed will do in interest rates, rather in their stimulus bond buying program. That they might start pulling the lever on that. So that could have a detrimental effect to risk-on assets like Bitcoin, like oil. Do you see that happening?
Well, I guess if we go back to March of 2020, all the assets traded down. Gold traded down, Bitcoin traded down, equities traded down, bonds traded down. There was just a general risk contraction. So occasionally that happens, but that's why we don't really try to trade the markets or guess the markets. We take a long view. I mean, short term is 4 years, long term is 10 years. And as you know, I'm holding Bitcoin forever, Christine. So there's going to be volatility in the near term, but it seems to me that now we have universal acknowledgement that the world needs an inflation hedge. After scientifically studying everything on Earth, I've concluded Bitcoin is the best inflation hedge. So the answer is, if you have Bitcoin, don't sell it. If you don't have Bitcoin, buy it. And if your Bitcoin's moving around, wait.
Okay. So in terms of your buying strategy, are you just waiting to raise more money and buy it? Is there any science to the timing of buying it?
We buy Bitcoin as fast as we can with whatever money we find lying around. So when we generate cash flows, we buy Bitcoin. And if we have equity cash flows from stock options get issued, we buy Bitcoin. If we issue debt, we buy Bitcoin. We'll from time to time use either cash flows or equity or debt in order to acquire more Bitcoin. And I think we're not terribly price sensitive. Like, we don't try to time the market. When Bitcoin traded down to 29 or 30,000 after the China crackdown, lots of people were calling for it to go to 20,000. We bought it at 36,000 and people said, oh, you overpaid, blah, blah, blah. But then it trades up to 56,000 and it doesn't look so stupid. So I think that if you try to time the market, you're just going to frustrate yourself. If you're buying it for the right reason, which is to hold it for the long term, then I think, any time is a good time to buy Bitcoin.
How high do you think Bitcoin will go? And I know your end of year outlook is about $100,000 per Bitcoin. Is that still the case? And going forward, or are you a million Bitcoin?
I don't have a near-term forecast or a forecast this year for Bitcoin.
You have the laser eyes.
Well, I do have the laser eyes, but the laser eyes mean that I believe that Bitcoin is critical technology to the human race, and it's digital property, and as apex property, it should presumably demonetize gold and investment properties and second homes and monetary indexes and ETFs. And that just means it should grow certainly past the market cap of gold and into the market cap of investment property. So, obviously, I think that the asset class over the long term is going to dramatically appreciate. I just can't predict the volatility or the trajectory between now and there, so I don't try to.
Mm-hmm. All right. Pivoting over to some other news. A lot of eyes are on Jack Dorsey. He's just announced that he is resigning from Twitter. He is also a Bitcoin enthusiast. He's led Twitter. He is leading Square. You've had a chance to talk to him at previous occasions. Do you have any idea where his mind is set in terms of, does he want to get into crypto? Does he want to get into Bitcoin?
I think Jack's the hardest working man in the industry, right? He's been leading Square, which is extraordinary, and they're just doing great. And he's been leading Twitter, which is another extraordinary job, and he's done a great job there. And he's also been very instrumental and influential in the entire Bitcoin community, which is almost like a third job. I don't know anybody that could do as well as he's done. I think the implications of this is he's going to focus more on Square and more on Bitcoin, and the world will move forward. I think it'll work out great.
Some of the criticism was from an activist investor of his, Elliott Management, was that he was not focused enough on Twitter. And in his resignation letter, he mentioned that he has moved Twitter to a point where it could move beyond its founders. I wonder, is it better that he is more focused, I guess, on payments versus social media and, other adjacent industries?
Jack's success at Square is stunning. And there was a point when Twitter desperately needed him. He turned around Twitter and he saved the company. And so he was instrumental there. And I think at this point, he said in his letter, he feels like Twitter's in a good place and he can move on to focus on other things, and Twitter's going to be great. I think that ultimately, there aren't many people in the world that could be CEO of a single company, much less two or have three major initiatives. I think Jack's done a stunning job at everything he's touched.
Mm-hmm. Moving on to another tech billionaire, Elon Musk, who you have also talked with as part of the Bitcoin Mining Council. Now, he's not been, as far as I can tell, he hasn't been talking too much about Doge lately. But have you been talking to him to, come around a Bitcoin more? Maybe, his ESG concerns can be somewhat alleviated. Where are those conversations at?
Well, I think in response to some of those early concerns, we formed the Bitcoin Mining Council, and we've already put out 2 quarterly reports. And the latest quarterly report showed efficiency was up more than 20% quarter over quarter, and sustainability is up to 57% or more. I think that the great resulting outcome of that scrutiny was we realized that Bitcoin mining is the most sustainable, cleanest, most efficient industry in the world. And I think that I think Elon's got a lot of things on his plate. He's launching rocket ships, and he's doing wonderful things at Tesla, and that's probably enough. We've all got our job to do. I think Bitcoin soldiers on, and Tesla moves forward.
With the Bitcoin Mining Council, what has changed since China's crackdown on mining? And we've seen the mining industry flourish in North America, shall we say, in its place.
I think that the China crackdown created an exodus from China, and it was a godsend for North American Bitcoin miners and for the North American Bitcoin business. It really transitioned Bitcoin mining to North America and to the West in general. It was an economic windfall. Companies like mine, we were able to buy nearly $1 billion of Bitcoin at dramatic discounts versus what we would have had to pay. We bought 500 million at 36,000 a coin or something, and we would have had to pay 85,000 a coin to buy the same amount. So it's good for Bitcoin holders in the rest of the world. It's good for Bitcoin miners. I've said before, it's a tragedy for Bitcoin holders in China. If you had to sell, right, it's a tragedy for you. It wasn't good for Bitcoin mining industry in China. But ultimately, it was a catalytic event that accelerated the institutional adoption of Bitcoin, as well as the adoption of Bitcoin technology in the Western world. And it cemented the idea in people's head that Bitcoin is Western technology. It's good for the United States. It's good for Western Europe. It's good for the dollar. And I think that that was a critical event in the development of Bitcoin.
Mm-hmm. We see India discussing in their parliament that they may consider banning private cryptocurrencies like Bitcoin in favor of making way for a central bank digital currency, a digital rupee, and a framework around that. So there seems to be two tracks that countries are taking. They can take a more private blockchain route, more centralized route in regulating digital currencies for their own central bank digital currencies, or allowing private cryptocurrencies or it's a public cryptocurrency really, like Bitcoin, letting them grow and proliferate. As you see this divergence, what do you see happening?
I think that this has been a great year for the institutionalization, the maturation of the crypto industry. And in this particular way, people are realizing that there's a digital currency and there's a digital asset. And the consensus among central bankers, Christina Lagarde, Jerome Powell, all the regulators, even in India, even in China, is Bitcoin is digital asset. They'll call it a speculative asset or a store of value asset, but it's an asset. It's not a currency. An asset means you can hold it as a store of value, and it competes with gold or it competes with a second home as an investment property. A currency is a medium of exchange that you can transfer tax-free. And it's pretty clear that governments want to keep control of their currencies. The rupee, the dollar, the euro, the CNY are currencies you can use as a medium of exchange and transfer tax-free. They're not threatened by your ownership of a digital asset as long as you agree to pay tax if you were to transfer it. So all of these regulations in India and the like, they're really regulations constraining your use of a digital asset as a currency rather than as a property. And you could just boil them down to this one observation. You can own as much Bitcoin as you want, but if you give it to your friend or you sell it in the open market at a profit, we want you to pay capital gains tax on it. Mm-hmm. And if you just acknowledge that, then you realize that the future of the industry is quite bright, because Bitcoin could become $100 trillion digital asset class and still never be, replacing the rupee or replacing the CNY. I think that the real struggle in digital currency is going to be US dollar stablecoin versus the Indian rupee. And I believe that if major US banks issue US dollar stablecoin, then you're going to see stablecoins grow from 130 billion to a trillion to 10 trillion. And I think that the US dollar is the threat to a digital rupee or a digital CNY. And you want to stay focused on that struggle. That will ultimately result probably in capital controls where countries with weak currencies, a weak peso, a weak rupee, a weak CNY, they're going to be concerned about all their citizens swapping their currency for the dollar and moving it back and forth. And that's the maneuvering that's going on behind the scenes there with the regulators.
Interesting. Last time we spoke, I asked you if you saw the Bitcoin replacing or at least competing with the US dollar as a global reserve currency. And you said that you see Bitcoin as going on US dollar rails or payment rails. Maybe you can walk me through this and explain a bit what you meant.
Let's just say everybody wants a savings account that yields interest and goes up in value, and they need a checking account to pay for their coffee. If we fast forward 10 years, 8 billion people with mobile phones running Android or iOS or the like, with a digital wallet, they want to have currencies in the wallet. They'll have CNY in China, they'll have USD in the US, they'll have euros in Paris, and they'll have the rupee in India, assuming those governments continue to exist in the next 10 years. They probably will. Those will be the medium of exchange. You can transmit all of that money at the speed of light with no tax obligation, and you can buy things cross borders with them. But everybody wants that savings account, and you can't save your money for 10 years using the dollar or the euro. You need to invest it in an asset that will go up in value. So you either have to buy land, or you have to buy stocks, or you have to buy Bitcoin. So I see Bitcoin as the world reserve asset, whereas I see the dollar as the world reserve currency. And the distinction is currencies are used as a medium of exchange, tax-free, and the asset is used as a store of value and an investment strategy. And you really never want to sell it ever. You want to hold it for 100 years. But should you sell it, you owe capital gains tax on it. And I think both of them will coexist, because 100 million companies are all wired to move money around in currencies, and every government mandates that the currency is tax-free, but the property is taxable. So as long as we have governments and as long as we have companies, we're going to have a dichotomy between the currency and the property, right? And in places where the government collapses, right, then maybe the property becomes the currency in a form of barter. But really, you would much rather spend the currency because it's losing value and save in the property because it's gaining value, right? It's wiser to hold Bitcoin forever, borrow against the Bitcoin, pay for your coffee because the money you borrowed is going to zero, whereas the Bitcoin's going to infinity. So you really don't want to pay for your coffee with your Bitcoin. You want to pay for your coffee with a currency. And you'd be better off to pay for coffee with a peso, because the peso is losing value of 60, 70% a year, whereas the dollar is only losing 15 to 20% of its value a year. So that's how I view that. They're all going to move on crypto rails. Everybody wants to move dollars at the speed of light for free, and they want to move assets at the speed of light for free. And the world's coming to terms with how they're going to do that.
Well, when you see things with with El Salvador using Bitcoin as legal tender, we have the Lightning Network where you can spend Bitcoin in small denominations. Do you see people spending and using Bitcoin as a currency more and more?
If someone had a bunch of Bitcoin and they wanted to buy a car, my advice to them would be borrow enough money to buy the car, keep your Bitcoin, pay for the car with dollars or pesos or euros. That's a better strategy. The Bitcoin goes up 100% a year. If you had $1 million and you paid for the car with 100,000 or 50,000 of Bitcoin, then you would lose $10 million capital gain in the future. So I don't really think it makes sense to pay for things with an appreciating asset. It makes sense to pay for things with a depreciating currency. The weakest currency you can find. If you had bolivars in Venezuela, and you had a choice between buying the car with bolivars or buying the car with Bitcoin, I would say buy the car with the bolivar. And if you don't have any bolivars, but a bank will give you a loan in bolivars against the Bitcoin, you can see the best idea going is I borrow money against Bitcoin, and if it keeps doubling every year, then in 10 years, I'll have $100 million of Bitcoin, and I'll just owe a $100,000 loan. Whereas if I paid with the Bitcoin, I won't have the $100 million. Okay. So no, I wouldn't sell the Bitcoin to pay off your mortgage, and I wouldn't sell the Bitcoin to buy the car. I would always pay for the car in the weakest currency you can find. And the best deal going is find a bank that will loan you money in the local currency.
So we had the chance to speak with the El Salvador ambassador to the United States, Melania Mayorga, recently, talking about El Salvador. And she said that Bitcoin challenges the authority of the United States. Is that something you could agree with?
No, I think Bitcoin is like digital energy, like oil is like liquid energy, like steel is metallic energy, like electricity is electromagnetic energy. And I think that the great nations will harness oil, steel, electricity, and Bitcoin. It's just a technology, right? It's, as I've said before, it's not a currency. If you use it as a currency, you would be paying $50 million to buy a Lamborghini. If you look out 10 years, a much better idea would be to keep the $50 million and the Lamborghini and owe $300,000 in debt.
So are you saying 1 million Bitcoin in 10 years, or where's that go?
I think eventually Bitcoin as an asset class becomes $100 trillion asset class. If it replaces gold and it replaces digital, other forms of property, and it replaces bond portfolios, then why can't it grow by a factor of 100?